FOMC stands for the Federal Open Market Committee. It is the decision-making body inside the Federal Reserve that sets the direction of U.S. monetary policy. The FOMC meets exactly 8 times per year, and each of those meetings is a high-impact event for financial markets, especially crypto. At every FOMC meeting, 3 things matter. First is the federal funds rate, often called FFR. This is the target interest rate range for overnight lending between banks. It represents the price of liquidity in the system. When the rate goes up, money becomes more expensive. When the rate goes down, money becomes cheaper. Second is the FOMC statement. This is the written message that explains how the Federal Reserve views inflation, economic conditions, and future risks. The wording of this statement is critical. Even if the rate does not change, the tone of the statement can shift markets. Third is forward guidance. This is what the Fed signals about the future. Is policy likely to stay tight? Are rate cuts approaching? Is inflation still a concern? Crypto markets react strongly to these signals because crypto prices are driven by expectations, not just current conditions. This is why the FOMC is so important for crypto. Bitcoin and the broader crypto market price future liquidity. When the FOMC signals higher interest rates for longer, liquidity tightens. That usually triggers a risk-off environment, where investors reduce exposure to risk assets like crypto. When the FOMC signals easing or future rate cuts, liquidity expectations improve, risk appetite increases, and crypto demand often rises. History makes this clear. In 2022, the Federal Reserve raised the federal funds rate aggressively from near 0 to over 4% within the year. During that tightening cycle, Bitcoin declined by roughly 65%. That was a textbook risk-off regime driven by restrictive monetary policy. Now compare that to December of 2023. The Fed kept rates unchanged, but the FOMC statement turned noticeably softer. Markets interpreted this as a signal that future rate cuts were coming. In the weeks that followed, Bitcoin rose by nearly 20%. The decision did not change, the message did. FOMC days are also known for volatility. The first spike usually happens at 2 p.m. Eastern Time when the rate decision and statement are released. Direction often becomes clearer as the statement is analyzed. If there is a press conference, it frequently creates a second wave of movement. On average, Bitcoin's short-term price swings on FOMC days are 2 to 3 times larger than on normal trading days. Here's the key takeaway. The FOMC does not directly move crypto prices. It changes expectations. The federal funds rate sets the cost of liquidity. The statement sets the direction. And crypto reacts to the difference between what the market expected and what the Fed actually signaled. If you understand FOMC days, you stop reacting emotionally and start trading based on regime shifts. In the next lesson, we'll break down a real-time FOMC day checklist, what to watch before the announcement, during the release, and after the market reprices. Subscribe, turn on notifications, and comment FOMC Playbook to continue the series.